Certainly on this big day, as we see DoorDash get ready to start trading as a public company, I think that's really the place I want to start right now with you. There seems to be this debate in the market about whether DoorDash is sort of seeing the best growth and the greatest opportunity right now that it's going to see, given the fact that it's been a major benefactor of COVID-19, or if this is really just a sign, a shift of a bigger, broader, more secular shift.
I would say the latter. DoorDash and the other companies in that sector are essential for restaurant survival. They've been more critical now as our industry is decimated, but as the future evolves after vaccine and confidence to go back to dining out, they are so important to us because people now are used to having a delivery. They play a very, very important role that can only grow.
So hearing you say that, I mean, Virtual Dining Concepts, your company uses a number of delivery providers, DoorDash, but also Grubhub, Uber Eats, Postmates, Seamless. Who do you like working with the best? And is there room for all of these different players, or do you foresee more consolidation?
They're all fantastic. They all see the marketplace. And the important thing here is that there's been a lot of criticism, wrongly, of the third-party platforms and their exorbitant fees. It's not true. We, as restaurateurs, have to work our business in a way that we utilize our existing labor. And doing that without having extra labor to then use the platforms works economically and still throws off a healthy bottom line. So they are here to stay. I love them all. Today, I love DoorDash. I'm going to try and buy some stock.
At $102 a share right now, are you going to buy at that price, or are you hoping it comes down? Like, what do you think of the valuation?
I'm not in that business.
Fair enough.
I was. But just to talk about what we're doing.
Yep.
All restaurants need more PPP. All restaurants need more landlord forbearance. Generally, landlords have been very supportive, but we're all in trouble with the exclusion of drive-through restaurants and some QSR brands that are delivery. But the greater industry is in big trouble. What do? We have to maximize sales, subdivide sales between more people to dine in when they can, more delivery of our core bricks and mortar brand, and then the new phenomena of virtual brands. Very quickly, a virtual brand is an online delivery brand only. It is the largest, fastest growing sector and will be an enormous component of DoorDash's future as well as their competitors. A virtual brand is where we come in. There are several ways that virtual brands are currently being delivered. There's cloud kitchens, like you've talked about Travis and a company called Kitchen United. There are car park operators like Reef, who are doing excellent jobs, but we have 2 points of difference. First and foremost, we're going to the restaurant industry and saying, here is a ready-made formula for you to become our market partner with your 3-mile exclusive territory. And here's some brands that our company, Virtual Dining Concepts, have created for you. And we give them every single move. They have to just be the distributor, the last mile, and buy the food and packaging. And it will throw off to their bottom line in excess of 30%.
Wow.
While still giving all the money necessary for the platforms. And then our other point of difference, I've spent my life in celebrity branding, from Planet Hollywood to Hard Rock to Earl of Sandwich to my partnership with Guy Fieri, all celebrity branding. And I'm applying that thinking now. For example, last week we got 5 billion impressions when we announced Mariah Carey's cookies. 8 great cookie brands, a wonderful frozen cookie dough.
Yeah.
And
right.
You, as a local restaurant, can become our partner.
Shepard Smith here. Thanks for watching CNBC on YouTube.